Welcome to Bionic BoB Crypto. I'm your host, Bionic BoB. Man, today is June 12th. I'm coming at you at 9 a.m. in the morning. I'm back with another video. We're going to talk about what is dollar cost averaging and should you be dollar cost averaging into Bitcoin right now. We see all the FUD. We see all of the doom and gloom in the market right now, right? There's a lot of doom and gloom. So we're going to talk about it right now. Let's get into the coin market cap for the day. So today, Bitcoin is at 35,800 at the time of making the video. We've just been in that range. We've been in that range, 31, 32, 33 to that $38,000 region. We've just been bouncing up and down there. Many say that, hey, this is a buy zone, a zone where the whales are accumulating. Smart investors are accumulating. The banks are still trying to bring the price down, but the smart money is still accumulating and dollar cost averaging. That's what this video is about today, right? So let's get into it. What is dollar cost averaging? Okay, so Investopedia says that dollar cost averaging, or DCA in this circumstance, is an investment strategy in which an investor divides up the total number to be invested across periodic purchases of a target asset. In this instance, we're talking about Bitcoin, but you can take dollar cost averaging and apply it to any type of investment product, right? So what you do is you buy periodically of a target asset in an effort to reduce the impact of volatility on the overall purchase. Now you say, oh, what does that really mean? Well, what it means is you don't come in with the whole wad at one time. That's what it means. Okay. So for example, right now, doom and gloom in the market, right? Doom and gloom in the market. We don't know, should we be buying Bitcoin? People are saying sell it. It's at the top. It's at the bottom. Well, first of all, let me ask you this. What do you believe and what is your goal about Bitcoin? If you believe that it is the most precious asset that's ever been created, like I do, and let me say this as well, not financial advice. I'm not telling you to buy. I'm not telling you to sell. This channel was created to share my experiences with you guys, okay? Make sure you guys do like and subscribe to the channel, okay? I've been in the game since 2017, bought at the top of the market in 2017, but just never sold. Just held on and dollar cost averaged all the way through crypto winter until finally this bull run, we're back, baby. Not only are we back, we are in the profit again. Okay. So dollar cost averaging, or DCA, has worked for me. Okay. During that whole crypto winter, okay, the price went, the last bull market in 2017, 2018, the price went all the way, as we know, from almost $20,000 all the way down to about $4,000. Okay. I saw my portfolio shrink 80, 90% because I also had some scraggle coins in there, a lot of scraggly coins, right? So what did I do? Well, first of all, I didn't leverage. Okay. And the second thing I didn't do was I didn't sell. Okay. But what did I do? I dollar cost averaged, meaning I spread out my buys during the whole time and didn't come in with all of the money at one time. So for example, say you have $10,000 that you want to invest. Okay. If you come in with the whole $10,000 at a certain price, you're just stuck to that price. Okay. So if it goes up, great. It could go up or it could go down. If it goes down, then you don't have any more money on the sidelines. All right. Now, regardless of what anybody tells you on YouTube or whatever financial guru or wizard tells you anything, at the end of the day, no one knows anything. Okay. No one knows anything. And that's just the bottom line. Okay. So we knowing that as investors, well, how do we navigate that? Well, you say, Bob, okay, if no one knows anything, then what are you talking about? Well, what I'm talking about is the strategy of using dollar cost averaging to spread out your buys, to limit that volatility, and to average the price down. Okay. So for example, Bitcoin, let's just use 30,000 as an example. All right. If you come in with at the whole 30,000 with all of your money and the price goes up, fine. That's great. You're happy. But what if the price goes down and you don't have any more money? Well, if the price went down, you could layer in your buys a little bit more. You could average in that price. Okay. So let's break it down even into simpler terms. Say a price of a particular asset is $1. Okay. One of your scraggly coins is $1. All right. So you buy $1,000 worth at $1. Okay. Tomorrow, that price goes down to 50 cents, for example. Okay. So you're like, oh my God, if you came in with all of your money at the top, you're down 50%, right? But if you didn't, and you're employing the dollar cost average strategy, then the price went down to 50 cents. Say you bought another $1,000, right? So you have 1,000 that you bought at $1 and 1,000 that you bought at 50 cents. So you have $2,000 invested, and now your average price of that particular asset is 75 cents. So you're averaging that price down. Now you say, well, okay, well, great. That works when you're averaging down, but what about going up? Well, once again, we don't know where the price can go or where it's not going to go. No one knows. So regardless if the price goes up or down, we average in, we layer in. Okay. That is the strategy of using dollar cost averaging. What I like to do and why I use it personally is because I don't want to sit around looking at the market all day. I don't want to be sitting around looking at charts. I have another business. I'm a business coach. I help entrepreneurs build businesses, and I don't want to be sitting around. I'm not a day trader. Okay. But I love crypto and I love Bitcoin. And I believe that it is a very, very precious asset. And I've made a lot of gains in it. I've made some losses, but I've made some gains. That's life, right? So that's why I use that dollar cost average strategy, is because I don't have to sit around worrying about it all the time, right? If the price goes up, I'm happy. You might take some profits if your price goes up and you double your price. I mean, I'd take a little bit of profit and have it on the side. So when and if that price goes down, that we're able to have some money and we're able to dollar cost average into a particular asset. Okay. So I just want to make this little video on a strategy of dollar cost averaging and how I believe as an investor that doesn't want to be day trading, that doesn't want to be looking at the charts all day and wondering if the price is going to go up or down. Maybe you have another job. Maybe you're investing, for the long term, right? So I always like to invest and think about things in the long term. All right. Now, remember, don't invest more than what you're willing to lose, and don't invest your rent money and all your mortgage money at one time, because it might not come back to you like that quick. Right. So thank you guys once again for watching the video. Make sure you guys make sure you guys subscribe to the channel, and let's get into it. I want to share my experience about the cryptocurrency industry with you guys. I will be doing live streams at midnight Eastern Standard Time, so make sure you guys join me there as well, where we're going to chart, chat, and chill about the crypto market. Once again, I'm your host, Bionic Bob, and this is Bionic Bob Crypto, and I'll catch you in the next one. Peace and love.